Yep, of course, the big question mark being whether or not we get more people filing for unemployment or on targets. And James, tell us why, just for a second, just to put you on the spot. Why does this number matter so much? Obviously it's a sign of the economy, but why do unemployment claims? Why should traders really be paying attention to this number today?
Well, it's going to affect the dollar. Just like any of these news events, it's going to cause dollar strength, and the dollar is a huge part of not only the U.S. economy but the global economy as well. Everyone around the world is watching the strength of the dollar to see what it's doing. And so when it comes to unemployment claims, people without jobs, that's going to be people who aren't bringing in money, people who aren't spending money, and that's going to have a big impact on the economy.
Yeah, it's certainly beyond just the economy here in the United States. You mentioned it. Of course, the global economy will watch. Speaking of global economies, James, one thing that has been kind of fun to watch, or I shouldn't say fun, kind of interesting to watch this week, is the central banks coming out with their monetary policy. So usually what happens is when it comes to central bank rates, like what we had for the Bank of Canada and the RBA, which is the Australian central bank, usually what happens is that the forecasts are straight on, meaning, people expect a certain rate hike. All the forecasts, all the numbers indicate likely what the rate hike will or rates will be, whether they're going to raise them, keep them, or cut them. Usually they're pretty spot on. Well, this week, James, we had two central banks back to back, big ones, Canada and Australia. Their projections, the forecasts were for them to hold, and we got rate hikes. So there's an interesting sort of thing that happened globally, as you mentioned. We're watching this number here today. Of course, it is impactful to the US, but it's also important globally. All right, guys, we've got our chart set up, and we've got about 30 seconds to go on the news here. Again, we're watching unemployment claims this morning to see how many people are filing for unemployment. This is a huge number. It's very, very important. Now, again, the spike, we'll see if there is a spike. It very much depends whether or not the number is hotter than expected, cooler than expected, so on and so forth. But we will have the coverage for you, so don't go anywhere. Breaking news after this.
Man, getting a nice tan out here. How you doing?
Dude, I'm getting cooked by the sun and by this euro yen trade I'm stuck in. I took a sell trade.
Dude, you need the EdgeFinder.
The EdgeFinder?
Yeah, if you had the EdgeFinder, you would have known that smart money was actually long.
Really? So you're telling me I was selling when smart money was long, and if I had the EdgeFinder, I would have known that?
Exactly.
Pass me one of those EdgeFinders. Let me get one of those. Get our biggest discount of the summer. Get access to the EdgeFinder, our MT4 and MT5 softwares, indicators, and robots, all in a single 20% off discount offer. Take advantage using the links and promo codes down below in the description.
All right, we're about 9 seconds to go here, guys. Let's see if we get anything. Again, we'll watch to see what that spike, if there is a spike, follow the report. All right, and dollar headed down, gold shooting up. Look at this. Gold making an initial move, testing just above 1950 here as we get going. What a pop. Very, very nice there. Initial movement to the upside. Dollar coming down. S&P, little mixed reaction. Dollar yen breaking down lower here this morning off of this news. And there goes gold trying to hold above that 1950 mark. We're just shy. There it goes. 1952 being printed here. And an impressive spike in the direction of the upside for gold, downside for dollar crosses. Probably good for those of you guys watching things like Euro USD. Let's pull it up on the chat or on the chart here, and we can see there goes the euro. Euro is up here today off of this reaction. Let's go have a look at the numbers and see why this market is moving the way it's moving. We'll head over to this page right here, and let's see if we can refresh the page. Employment claims came out higher than expected. We had more unemployment claims coming out, 261K in terms of unemployment claims. This is showing slight weakness in the jobs market. The forecast was 236,000 job unemployment claims. We've now instead got 261. Now, what's the trade here, guys? What are we watching for? Well, Let's go back to where I was just before this. I am looking to be long gold on a pullback. Yesterday I got stopped out, but again, I'm stepping back up to the plate and I'm looking for my entry. Where are we at with gold? Forward chart was where we started with this, and we had a really nice reaction off this zone yet again. This is like the third or fourth time? 1, 2, 3, 4. This is the fifth time. Buyers have just been so strong in this area. For those of you guys who are watching gold, this is a really impressive bounce. The question will, however, be, do we get some sort of reaction to this zone that we were, that we broke out of yesterday? My answer initially would be, yeah, I think we probably see some reaction there. And what do we do with that? Well, I'm looking to trade the pullback. The Australian dollar, it's been an impressive run up. I will say that the Australian dollar, quick fundamental breakdown. The RBA raised interest rates when it was expected to kind of hold. It's been a really, really strong driver. They also had some GDP news that came out. But overall, the Australian dollar looks really strong. And even if I was short biased on the Australian dollar, there's no sell I can take when the market's moving like this. You got a pretty clean higher lows, higher highs off the 4-hour chart. And yeah, it's a bit of it's a strong chart, I would say. Frank, do you have any thoughts on dollar against any currency pair? I mean, I think you were trading Euro Aussie at one point, right?
Yeah, so I am in Euro Aussie and Pound Aussie. I got in after the rate hike decision because, well, one, it was a surprise, so the initial reaction was pretty steep to the upside. But overall, the pair's just in a longer term downtrend, and CPI is coming down. They didn't sound too hawkish to me, so it kind of seemed like maybe the path of rate hikes was going to take a break for a while, similar to what people are thinking about the US too. And so I think this move, it took us down to a significant trend line, kind of similar to gold, just a long-term level of support. So I thought, maybe it would be a decent attempt at this demand zone and try to catch a run back up to the upside. So
yeah, it's
So
been
I'm sorry.
So Frank, you're in a long right here on this line, looking for a rejection,
Right.
Or
I'm in a long
Okay.
trade, yeah. And if price breaks below, then I'll switch up my bias. But right now we're looking like a long-term uptrend and then a steep downward move from just the sentiment going into this rate decision. So I think like the RBA is kind of less hawkish now. And then we got ECB's decision next week. So I think we might be looking at demand in the euro going into next week.
so what's your target? Or are you doing a trailed stop loss?
I'm just trailing it.
Oh, okay, cool. Yeah.
Marco, I want to ask you something about the dollar here today.
Yep. Sure.
Dollar, of course, really given back some of its gains here recently. I'm looking at the daily chart here, and you can't help but notice that, of course, the same trajectory that was happening for a few weeks now has slowed. Well, and Frank, and I think you're gonna have your moment in the sun here. I've got the central bank forecasts pulled up for you, and if we could switch over to my screen, this is your moment because you were the one who helped us to build this. You just mentioned likelihood of inflation cooling. Walk us through what we're looking at here. I've got the US dollar selected. We're looking at short-term interest rate forecasts. What are we looking at?
Yeah, so these are short-term interest rates and not the federal funds rate, because they'll show different numbers, but short-term interest rates and funds rates move the exact same way. They're like a direct correlation with each other. So we have short-term interest rates for all these currencies, but we're looking at the USD right now. So what it does is it takes the past year or so and projects the next 4 quarters of data. So what we're looking at is Q2 of 2023. We're sitting around 5. We're probably going to see higher rates going forward if we stick to where we're at. And what is projected now is over time, we'll see a decrease by late 2024 when the federal funds rate is sort of reaching their decline and starting to cut in interest rates. So what it does is it moves along with the federal funds rate activity. So it's not like you're not going to see the exact same number, but you're going to see the same direction in which it moves, and it is more sensitive than longer term. So we'll see probably more accurate levels of interest rates going forward. So higher rates where we're at, we'll stick to that, and then we'll see inflation coming down. If you scroll down some, the USD is forecasted over time. Yeah, the red dots are the forecast. So yeah, just a different visual on what how you can interpret it.
And Frank, to add to your thought there too, one thing that's really important when we're talking about this stuff is, especially if you're talking currency pairs, right? So this is like a longer term projection of the dollar. You've got, rates expected to fall. That's the quick way of reading this. Rates are at some point expected to fall. But let's look at the counterparts. Look at the euro. There's a difference here that's very, very important. Yes, inflation is expected to gradually come down as well, but there are no on the horizon so far forecasts for the ECB to cut. So the difference there is very, very night and day. We have the Fed is sort of expected to cut at some point, and the ECB has no expectations to cut. And so this understanding, especially if you're going to be a currency trader or if you're going to trade things like gold, knowing what that Federal Reserve plan or the ECB's plan, broadly speaking, is really important. Take a look also at the Bank of England, expected to hold rates for quite a while, eventually expected to come down. Inflation is expected to decline across the most of the major central banks, but it's a really interesting study to pay attention to the forecasts that are shown here. So, of course, Marco, I'm sorry to deep dive on the fundamentals for a moment.
No, that's okay. That's okay.
This is one of our newer features that we worked really hard on, and Frank kind of took the lead on. So a really, really cool new feature to the EdgeFinder. We'll have more details about this coming out. For those of you guys who are already EdgeFinder users, we'll have some information. And by the way, if you guys would like to get access to the EdgeFinder, remember we do have our summer sale going on right now. It is ending tomorrow. So if you have not already taken advantage of the summer sale, if you want access to our software, it's a one-time fee. This is what it looks like. You can see all the stuff we've got here. You get access to the EdgeFinder Pro, as well as our MetaTrader and robots and indicators for free with your purchase. Right now, the savings are over $840 before we raise the price back up. So do not miss out.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EdgeFinder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.